Well, it was an up and down week on Wall Street. The Dow plunged Thursday following President Trump's decision to impose import tariffs on top U.S. allies, sparking fears of a trade war. And the ongoing political crisis in Italy also had investors worried. But the Dow did bounce back Friday following news of a positive jobs report. The S&P 500 also closed in positive territory. Nick Martell is the co-CEO of MarketSnacks, a daily newsletter that breaks down business news. Okay, Nick, I want to ask you first.
Yes.
Welcome, first off.
Thank you.
And I want to ask you about this sort of looming trade war. What do you think the consequences might be?
You know, it's so fascinating because I've been here a few times now talking about the trade war, what's going to happen. This is just another escalation on it, and there's so many factors at play. This part in particular is just awkward because we're talking about U.S. allies. We're talking about our friends who we've done so much with politically, and now they're getting restrictions imposed on them in the form of tariffs. So that's just kind of wild and came out of nowhere in a lot of ways.
Do you think that there's going to be a big repercussion out of this?
Yeah, so first, let's look at what actually happened here, which is, you know, 2 months ago, there were going to be tariffs placed on our allies. That was kind of delayed a bit until this moment when there could be some concessions made. Those concessions weren't made, and now we've kind of hit them. So the big key now is how do they retaliate? And what's fascinating is it gets super personal now. You look at what Europe is doing, the EU.
Yeah.
They're immediately putting tariffs on top U.S. brands, particularly that are manufactured in Trump-supportive states. So we're talking about like Harley Davidson, we're talking about Levi's jeans, we're talking about Jack Daniels in Tennessee. So it's getting very personal and escalating in a really unique way.
I also want to ask you about Italy. We've been watching it this week. If you weren't watching the markets, this was this is what rattled the place,
Crazy
really.
week.
Complete political uncertainty in Italy. They didn't have a government. Now they have a new government. It's been established. Do you think that is this at this point no longer an area of concern? Is Italy contained?
Yeah, it's not fully contained. In fact, this is going to be the beginning of a long process. We were trying to come up with the right term for it. We thought of like tortellini. We're going with Quitaly on this.
Quitaly.
Because it's just kind of like Brexit to a different degree. Now, there's similarities and there are differences here. We've been through this before, first of all, right? We had the European debt crisis that got drawn out in 2011, 2012, and that just rattled markets during that period. We've seen how Brexit is something that's still being dealt with. With Italy, it's a funny combination because it's more impactful because Italy is a larger size than Greece was. It's actually part of the Eurozone, so it actually uses the euro, unlike Britain. So that's another key difference. But at the same time, Italy's been through 67 governments in 70 years. It's a country with a crazy political climate. So on the one hand, you kind of want to dismiss it and say this is Italy being Italy. On the other hand, when you look at this Quitaly situation, it could be more devastating than the Grexit or Brexit situation.
I want to ask you also back here at home. June typically ranks as one of the worst months of the year for the S&P and the Dow. With that in mind, and this is based on Stock Traders Almanac, I should say, are you concerned about volatility in the month of June, and should investors be as well?
I think we're always concerned about volatility now, and I love this stat because it goes back to like one of the most fun things that we talk about at MarketSnacks, which is behavioral economics, which is just the way humans interact with the markets. We're doing a podcast exactly on this in the coming weeks. The interesting thing now is we're not really just talking about humans when we're talking about markets. We're talking about high-frequency traders. We're talking about robo-advisors. We're talking about algorithms that can trade based on what somebody tweets. So when you look at that, that's going to change and create more volatility than there typically has been. So those old behavioral economics that we've seen before, like people tend to sell in June and then go away and hang out for the summer, we're probably not going to see as much of that because it's not humans who are doing all the trading.
That's the other thing. I think people have forgotten over the past 20 years. It's not humans phoning up and, you know, saying buy this, sell that, right?
You actually, if you go to the New York Stock Exchange floor, one thing that's fascinating, you talk to any one of these kind of veteran traders there, and they'll be like, hey, this place was filled a few years ago. It was packed. You go now, it's almost more of a media space. You've got CNBC there. You've got other channels there. And the stock traders actually have less of a role on the floor. So it's a computer-driven trading world.
Nick Martell, so grateful you can join us.
Thanks, Rena. Great to be here.
Thank you, Nick.